Hi, I'm Alexandre Ferrari with Ferrari Lending. If you're an investor looking to buy or refinance real estate, but traditional banks keep turning you away because of income verification or complicated tax returns, then this video is for you. Today, I'm going to explain step by step how investors across the United States and even abroad are using DSCR loans to buy properties faster, smarter, and with fewer barriers. By the end of this video, you'll understand how these loans work, who qualifies, and how to position yourself for approval with confidence. Now here's what I've seen after helping countless investors close DSCR loans. The ones who succeed understand that real estate investing is not about chasing rates, it's about building equity and cash flow. DSCR loans allow you to focus on the bigger picture, asset growth and portfolio performance, while keeping your personal finances separate from your business. I've worked with clients who were turned down by traditional banks 1 month and owned 3 new investment properties the next, all using DSCR financing. That's what happens when you work with someone who understands investor logic, not retail banking rules. Wayne, what is a DSCR loan? Let's start with the basics. DSCR stands for Debt Service Coverage Ratio. Instead of qualifying based on your personal income, a DSCR loan qualifies you based on the property's cash flow. In other words, the lender looks at how much income the property produces versus how much the mortgage payment will be. If the rental income covers the mortgage, what we call a DSCR of 1.0 or higher, you're in business. For example, if your property rents for $2,500 per month and your total mortgage payment is $2,200, your DSCR is 1.13. That means the property generates 13% more income than what's needed to pay the mortgage. This ratio tells the lender the property can pay for itself. That's the foundation of DSCR lending. It's not about you, it's about the asset. Who can use DSCR loans? So who is this loan for? It's ideal for real estate investors both in the US and internationally, whether you're self-employed, a business owner, a foreign national, or an investor with multiple properties. DSCR loans simplify the approval process. There's no need for tax returns, no W-2s, and no personal income statements. Instead, the loan is underwritten based on the investment's cash flow potential. That means even if you've optimized your taxes like many successful investors do, you can still qualify to expand your portfolio. And because the loan focuses on rental performance, LLCs and business entities are often allowed. That provides privacy, liability protection, and flexibility for scaling. How the DSCR is calculated. Let's talk about how the DSCR ratio is actually calculated. The formula is simple: net rental income divided by total monthly payment equals DSCR ratio. Net rental income is determined by the appraiser's rent schedule, not just your current lease. That's an important detail. So if the appraiser confirms market rent at $2,800 and your total housing expense, principal, interest, taxes, insurance, and HOA is $2,200, the DSCR is 1.27. Most lenders want to see a DSCR above 1.0. But the sweet spot for the best terms is typically 1.15 or higher. If the ratio falls below 1.0, some lenders will still consider the loan, but at a higher rate or lower loan to value. That's why it's critical to work with a mortgage broker who understands investor-based underwriting and can match you with the right DSCR program. Benefits of DSCR loans. Now let's discuss why these loans have become so popular. No personal income verification. Fast closings, often within 2 to 3 weeks. No limit on property count for most programs. Flexible ownership through LLCs or trusts, ideal for short-term and long-term rentals. For many investors, this means freedom to scale, diversify, and take advantage of opportunities that conventional financing can't accommodate. And for foreign nationals, it's often the most practical gateway into U.S. real estate. What to watch for? Of course, every investment tool has rules. DSCR loans typically require a down payment of 20 to 25%, a minimum credit score of around 1660 or higher, a DSCR ratio that meets program guidelines. Rates are slightly higher than conventional loans because of the flexibility offered, but for most investors, the ability to qualify without income documentation far outweighs that cost. Now, here's what I've seen after helping countless investors close DSCR loans. The ones who succeed understand that real estate investing is not about chasing rates, it's about building equity and cash flow. DSCR loans allow you to focus on the bigger picture, asset growth and portfolio performance, while keeping your personal finances separate from your business. I've worked with clients who were turned down by traditional banks 1 month and owned 3 new investment properties the next, all using DSCR financing. That's what happens when you work with someone who understands investor logic, not retail banking rules. If this sounds like a strategy that fits your goals, let's connect. I'll personally review your scenario, analyze your property's cash flow, and help you understand exactly how to structure your loan for the best possible terms. You can reach me directly at Ferrari Lending or visit ferrarilending.com to schedule a consultation. I'm Alexandre Ferrari. Thank you for watching, and remember, the smartest investors don't wait for perfect timing. They build the right structure and move with confidence.